OPEC plus oil giants including Saudi Arabia, Russia surprised markets by agreeing to a larger than expected output hike of 548,000 barrels per day starting August. Now, Ashesha joins in with more details on this news. Ashesha.
Well, yes, oil market continues to be in focus today on account of that higher than expected output hike that OPEC Plus announced over the weekend. Now, remember, Street was penciling in 411,000 barrels per day output hike, but it has come in much more than what the Street was working with. 48,000 barrels per day. That was what is being announced. Now, remember, this is a part of larger scheme of things. OPEC Plus voluntarily cut output in 2023 by about 2.2 million barrels per day, and now it has started unwinding. It started in the month of April. It continued for the months of May, June and July, and now for August as well they've announced this output hike. In fact, the agencies have reported citing delegates, and Goldman Sachs has also come out with a report where they say that OPEC Plus could consider output hike of 550,000 barrels per day in the month of September as well. And if this were to happen, then the entire voluntary output cut unwinding will be completed in this year as well, which will be 1 year ahead of their planned guidance of calendar year 2026. So on the back of that, we have seen some kind of pressure on oil prices. Brent crude has fallen for the third consecutive day today. It is down nearly 0.5% as we speak, trading near that $67–68 per barrel mark. Now remember, this comes at a time when there are already concerns about demand with respect to tariff, and at a time like this, supply is likely to increase in the oil market. Now, Goldman Sachs has come out with a report where they are saying they are maintaining their estimates. They've given a target for Brent at $59 per barrel by the fourth quarter of calendar year 2025, and they've given a target of $56 per barrel for calendar year 2026. So that's the target that they've given for Brent crude. Oil market continues to be in focus and declining in trade on the back of suspected output hike and increase in supply going forward.
All right, thanks Ashesha for that update, and with this we are completely out of time in this edition of Markets at Noon.